Hi everyone, this is David Schlossberg from Assured Concepts Group with an educational economic update for January 2017. In this month's video, we'll be discussing some of the major headlines that influenced the markets in December and be providing insight as to what these developments could possibly mean for you as an investor. In the final trading days of 2016, the market rallied. It's been the best rally we've seen since the presidential election, but it has calmed down and all three major indexes have posted losses for the final week of December 26. Despite the dip, the S&P 500, Dow, and NASDAQ were each up over 2% in December, and they posted pretty good gains for the year. S&P up at 9.5%, the Dow up over 13%, and the NASDAQ increasing 7.5%. Arguably, the biggest economic event we experienced last month was the Federal Reserve's much anticipated interest rate increase. On December 14th, the Fed raised the benchmark rates by 0.25%, which was only the second time that they increased rates since 2006. The Fed chairwoman, Janet Yellen, explained that her group's decision had reflected the economy's progress and their expectations for continued economic development. The Fed also indicated that they may introduce 3 additional interest rate increases in 2017, up from their previous prediction of 2. Unlike the market volatility after the Fed's last interest rate increase in December of 15, investors had a much more subdued reaction this year. The VIX, or Volatility Index, which is a main measure of volatility, increased somewhat in December, but ended the year 2016 lower by 32% more than where it began in January. Ultimately, rising interest rates are a sign that the economy is growing. Last month, we saw several indications of this growth, including the final report on the third quarter gross domestic product, or GDP. In the Commerce Department's analysis, they adjusted GDP up to a 3.5% annual rate, showing the best economic growth in 2 years. GDP wasn't the only economic measure that beat expectations in December. Measures of consumer sentiment and consumer confidence both reached levels not seen in many years. Consumer sentiment, which measures consumers' views on the current and future state of the economy, reached its highest reading since January of 2004. Measures of consumer confidence also hit a 13-year high, indicating that people feel more positively about business conditions, employment, and family income. In addition to these positive signs, we saw the dollar hit a 14-year high on December 20th and end the year up by 3.8%. Crude oil also continued to recover as investors anticipate that OPEC and other producers will begin to reduce output in the current calendar year. But of course, positive economic indicators don't mean that everything is perfect in the economy. Data released in December showed decreases in durable good orders, industrial production, and housing starts. We don't like to see these declines, but the biggest economic question marks may not come from existing data, and instead they may come from changes in our political leadership. Stocks have rallied on hopes that President-elect Trump will reduce regulation and taxes while increasing some infrastructure investment. But no one knows for sure what changes could be on the horizon until it actually happens, or how Trump's policies will actually affect trade. As we begin 2017, we'll closely watch economic data and the political environment. We'll also now turn our attention to upcoming fourth quarter and end-of-year results to learn more about how the economy performed in the final weeks of the year, while closely monitoring what lies ahead. Stay tuned for next month's video update, where we'll have annual data to discuss, or join us at our semi-annual event on February 6th in Biaggi's. That's it for this month's educational economic update. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 847-426-1077. We'd be happy to talk to you. Once again, this is Dave Schlossberg with Assured Concepts Group, signing off for the month of January 2017. Thank you and have a great year.
If you would like to discuss your portfolio or personal financial needs, Please contact us at 847-426-1077. Nothing stated in this presentation should be considered an offer of a securities product nor an investment strategy. The advisors of Assured Concepts Group offer securities and investment advisory services through FSIC. FSIC is a member of FINRA and SIPC.